Do you want to make money regardless if the market goes up or down? Well, today I'm going to show you the Strangle Option Strategy. It's a great and simple way to profit from market swings, and in this video I will trade it in real time so you can see how effective it can be. Hello everyone, I realized I never introduced myself. My name is Max, and you might be wondering, why am I wearing a mask? Well, it's because my computer's been sneezing lately. It probably caught a virus or something. Okay, I know that was the best joke you've ever heard and you probably want more, but we are here to trade options, so let's do that instead. So a strangle is basically buying both a call and a put with the same expiration date, and that's it really. Now this will only be profitable if the stock makes a sharp move, and that's the beauty of it, because it doesn't matter in which direction that move is, it just needs to be a very dramatic one. So that's why I usually trade this before earnings. Alright, so I got my eyes on MDB, which if you're not familiar, it's a company that makes magnificent delicious bacon, and they have their earnings report today after market close, which meets the right condition for this strategy. So let's go into the trading app and take a look at the option chain. The stock is currently trading at $310 per share. Now the question is, what strike prices should I choose for my put and call? Here I like to keep things very simple, and I always estimate a 15% move. Why 15, you ask? Well, that's a great question. I've been watching the market for a while and noticed that when a sharp move does happen after an earnings report, it's usually around 15%. Of course, I've seen stocks move 20-30%, but it feels like 15% is the average golden number. To calculate a 15% move, we need to either divide or multiply our current share price by 1.15. So what was it again? 310 divided by 1.15 is 269. But I'll go slightly bearish and choose the 265 as the strike for my put. Now taking 310 and multiplying it by 1.15, we get around 355, which will be the strike for my call. Perfect, click trade spread here. Okay, so since we are buying these options, I'll have to pay a debit, which will cost me $7.59 per share. And since I'm controlling 100 shares, that will be $759, which is also the most I can lose on this trade. Let's click a review here, everything looks good, and send. And the order was placed. There it is. So if I'm risking $759, how much can I potentially make? Well, if the share price goes up, my call becomes profitable, and if the share price goes down, my put becomes profitable. So potential profit is essentially unlimited, as long as the price moves outside my break-even points. To calculate the break-even points, we take our strike prices and adjust them by the debit we paid. For the put, we had a strike of 265 and subtract the 7.59 debit, giving us a break-even of 257.41. And for the call, we had a strike of 355, and here we add the 7.59 debit, giving us a break-even of 362.59. So as long as the share price is either below or above these price points, we are profitable. And of course, if the share price stays between these points, I am looking at the $759 loss. Alright, nothing left to do now but wait for the earnings report, which as I mentioned before is today after market close. So I will see you tomorrow. Good morning, good afternoon, and oh man, very good indeed. For those of you who had MDB puts, congratulations. I'm happy to say that our strangle is extremely profitable as well. MDB has dropped not just 15%, not 20, but a whopping 25%. I mean, talk about a dramatic move, huh? It's currently trading at $231 per share, and my overall profit is, are you ready? $2,500, give or take. It's quite insane actually. My put is deep in the money, so it's holding a lot of intrinsic value, and it's currently worth $3,000. However, as you can see, my call is worthless because it's so far out of the money, but it doesn't really matter at this point. So I'm going to close this position now. The prices are very jumpy, so let's see if I can get this filled at 3,400. Yes, click review and send. Now, hopefully this will get filled soon. And yes, the order was filled. It took about 30 minutes, but it's done, and here it is. This strangle brought me a $2,641 in profit. I still can't believe it myself, and I'm not trying to flex on you or anything because this kind of profits are not common. I wish I could say this is another Tuesday for me, but no. In fact, I got extremely lucky. I cannot emphasize this enough. I mean, come on. A multi-billion-dollar company drops 25% overnight. It's insane. If you've traded options before, you already know this, but if you're new to trading, I want you to have realistic expectations, and this is not it. This is not typical, I'm just being real with you. However, the point of this video was to demonstrate trading a strangle, and I hope you learned something new today. I do consider this to be a very risky strategy. There are other much safer, more affordable strategies out there that I made videos about, and if you want to check them out, I'd be really happy about it. Good luck, be careful out there, and I'll see you next time.